Hello and welcome to Project Trade. This is the Technical Indicator Show, and it's the Parabolic Stop and Reverse, the Parabolic SAR, the Parasol, the Parasite, PSAR, PSAR, however you'd like to refer to it. That is up to you and will likely depend on a mix of your nature and your nurture. PSAR is an indicator developed by Wells Wilder, and it was included in his 1978 book, New Concepts in Technical Trading Systems. Rightly or wrongly, it is still used quite a bit today, and it's going to appear on your chart with dots above or below the price. How you interpret the indicator is that if the dots are above the price, that would be an indication to sell, and if the dots are below the price, then that would be an indication to buy. But as you know, a picture is worth exactly 1,000 words, so let me save us 1,000 words here and I will just show you. You can see what would be your standard buy and sell trades based off taking every direction from the indicator. Note the inputs that you should be able to change with the parabolic, and that's the step and its maximum. The step is essentially the rate of acceleration which in a continuing trend can increase by 0.02 up to its maximum amount of 0.2. So you can change the amount that the step increases by before it reaches the maximum. Instead of increasing by say 0.02 at each increase, it could actually increase by 0.03 or 0.04. Or you can increase the maximum amount that the step can increase to. So if you wanted it at say 0.4 or 0.6, you can do that. You will have noticed that the indicator name has the word stop and reverse in it. And whilst the dots do technically stop and reverse, because the indicator always runs data, they will do this regularly enough that whilst it will pick up on those big trend reversals, it will get hammered up and down in ranges and retracements, because it is still a lagging trend indicator. But it will try to give you good entry points on those trends, and you do get that little bit of momentum information from it as well, depending on whether the dots are growing further apart to show increasing momentum, or whether they're getting closer together, showing a decrease in momentum. Let's get over to the formula though, so we can confuse things a little bit more. With the formula, it's firstly important to understand that it has two separate parts, and which part that is used depends on whether the indicator is rising or falling. We'll start with the rising formula, and on the key you can see we have the acceleration factor, or the AF. That is the step input we just talked about, and its default is 0.02. And that is going to increase by 0.02 up to the maximum of 0.2 each time a new extreme point, or EP, is made. If the indicator is rising, then that extreme point would be the price reaching a new high in the uptrend. So our acceleration factor starts at 0.02, and new high price is reached in an upward trend, so the acceleration factor increases to 0.04. This is so the indicator can do its best to not drift too far from the price. So we can do the rising formula by first subtracting the prior parabolic reading from the prior extreme point, then multiplying that figure by the acceleration factor. We can then add our prior parabolic reading to that figure, and we have our current parabolic reading. For the formula when the parabolic stop and reverse is falling, we're sort of reversing some of the elements from the rising formula. First, let's do these brackets and subtract the prior extreme point reading from the prior parabolic SAR reading, then multiply that figure by the prior acceleration factor, and then subtract that figure from the previous parabolic reading. That will give you a parabolic reading, and you will be ready to draw it on your chart. When it comes to our entry signals that we can get from the parabolic SAR, we've briefly mentioned the main one. It's kind of the only one really, and that's if the dots are below the price, then it's a buy signal, and if the dots are above the price, then it's a sell signal. It is that basic to use, which is one of the main advantages of the indicator, how clear and obvious that main entry signal is. This doesn't have to be your main indicator though. Something that is great about the parabolic is how aesthetically appealing it is. It generally sits on your charts without obscuring your other indicators or the information that you want to look at. It doesn't squash up on your chart like oscillators can, so it might find its use as an entry indicator when you're actually using other indicators or information to determine the overall trend of the market. And this indicator almost certainly will be profitable when the market does go in a trend, and here is the pre-selected display only proof of that. Look at these for a couple moves right here. Even if you weren't filtering out signals and you took that little 2-dot buy trade in the middle there, those other trends are big enough to keep you jet skiing in Aruba. But what about when the market is in a range, which I have heard can happen quite a bit? And this is no good. That far left drop over there, you might be able to snag a little bit of profits there if you're a good profit taker. But some of these moves, you've got to remember, you always need to wait for the candle to close before you can enter the trade. So you're actually entering after those dots over there, and really you've missed a lot of the move. Those big candles have sailed right past you, and if you're a sane trader looking to consistently make money, then you've probably been stopped out on them. And if you are taking every single signal from the indicator, you will inevitably end up taking signals which immediately flip back against you. A single dot that reverses as soon as you've entered. So obviously it is better in a trend, but you're still going to end up getting a lot of false entries if you follow it in blindly. Fortunately though, you won't have to let those losses climb high with this one, as the indicator does come with some incredibly mediocre built-in money management. That's right, not only will the dots find you a winning entry point on occasion, those same dots can also be used to keep that bank balance of yours from imploding. It works like a trailing stop loss, and you can place the stop loss on or at the edge of the dot produced by the current period and continue moving it in line with each parabolic reading. Here our entry would be the little red circle at the bottom left corner where that trend begins, and the red line just below the dot is where we place our initial stop loss. Then as we manually adjust it up to move with the dots, we can see that eventually price does drop below the dots as price consolidates at the top of the trend, so we would have been stopped out there. You may also have noticed that blue line that's running across our chart, that is our long-term moving average. Since that's rising, it could act as a filter for us to only take buy trades, which would stop us taking that next short trade where the dots are above the price, but it would let us get into the next rising trend and again a nice run of profits until price consolidates at the top before falling below the dots and stopping us out. Just another case of a trend indicator working best in a trending environment. Another money management tool that you could base off the Parabolic is by saying that you will close the trade if X amount of dots turn against you. That X could be 1 dot, 3 dots, 6 dots. It's up to you, but I wouldn't set it too high or you're not really exiting the trade at all. Waiting for 12 dots to go against you before you close the trade, not really a stop loss. Probably just a loss. Here's a shining example of closing a trade 2 dots after it runs against you. Assuming you entered a buy trade successfully at the bottom there, after the second dot is closed against you up at the top, that is what you would take as an indication to close the trade and accept your profits. In this carefully selected chart, we can see that it proved completely correct, as price certainly takes a tumble just a few candles after. In the markets, the shorter timeframes can really whipsaw the parabolic indicator back and forth, so you might find yourself in and out of trades regardless of your filtering system. But give it a go in forex, metals, crypto, stocks. It can be more useful when particular news is released about a stock. If, for example, a company beats its earnings estimates by quite a lot, causing price to take a good move to the upside, well, that acceleration factor of the parabolic indicator, it will chase the price quickly to try and keep up with all that buying. If you do miss a first wave of buying, you might be able to snag onto a second wave. Moving forward, what do we have for the parabolic in the way of similar indicators? There are other trend indicators which do present themselves on the chart in the same fashion as a parabolic indicator would. They go below the price when they think there's an uptrend in price, and they go above the indicator when they think there's a downtrend in price. A couple examples of this include the super trend indicator, which unlike the parabolic stop and reverse, chooses to name itself appropriately for what it's trying to do. Or you've also got the chandelier exit indicator. Here is your super trend indicator, and you can see that you'd enter a sell trade when the line is above the price, like that red line is there. And it would be a buy trade when it flips to that green line that's under the price. And here the chandelier exit, which again gives those same on-chart signals, which is if it's under the price, it is a buy signal, and if it is over the price, it is a sell signal. Both the super trend and chandelier exit indicators can also be used as trailing stop losses, with their lines operating in the same fashion as the dots on the parabolic stop and reverse would. Also, there is an indicator which the man himself, Wells Wilder, did suggest to use in conjunction with the PSAR to get some confluence on your trade entries. He said it would need to be an indicator that would be able to identify the overall trend, and it's the ADX, the Average Directional Index. Unsurprisingly, to be honest, as he did also create that indicator, so there is a heavy dose of Wilder bias within his special source. At the very least though, it would give you some filter on the parabolic indicator, chuck a moving average on with them, and you might be able to get something working. In conclusion, my opinion is that as a technical indicator, the parabolic stop and reverse is okay at best. One of the things that makes it a useful indicator is how easy the signals are to interpret, and also the fact that it doesn't clog up your chart. It's a reasonably pleasant indicator to look at. Just because it's easy to interpret the signals though does not mean that they are good signals. It's very much a one-trick pony with how it tries to get you into trades. So like any indicator, it's going to have to be combined with other indicators. If you base your trade entries off every single signal the parabolic stop and reverse gives you, then sooner or later that margin call will come for you. The Grim Reaper of your trading account coming to shut down your crummy practices. An unpleasant experience for everyone. So stay clear of those ranges, because they will do a number on you for sure with this indicator. Obviously that's much easier said than done, but if you really want to use the Parabolic, then you're going to have to find a way to do that. Sadly, that's just how it is. And sadly, that is the end, but if you do want more information on the parabolic stop and reverse, then there will be some links in the video description for you to check out. And in case you didn't know already, every single chart that we use in this video has been completely pre-selected by me, specifically for showing you how the indicator may or may not work. That's right, they are in fact non-arbitrary, an illusion to deceive, if you will. But if you do want to see how it works in live forward testing strategies, I have done that, and we'll also link those videos in the description. This is Project Trade, and I am trading's last cartographer. Thank you for watching. Dink and Flicker.